So based off of the current impulse move that we have, I'm going to zoom in on this little range right now. Look at this. TOI was super dark right now, and it just released that that resting paper there. It's been sitting there a little while. Let's see, we have the mid right here. I'm going to right click and draw a fib extension. From this high right here is 37.25. We'll go to this low, that's 28.5, and then we'll come right back to the mid, which is 33s. And that's our key range. And this is just a short-term key range, right? It's only not even 10 handles wide. So it's very, very modest. But it's a key range that can get us looking at the right spots on the chart for this current market. And so right now, 28.5 is important, 37.25, and 33s. And then you can see right here, very dark TOI band right there. That means there was some resting limit orders right there. They're not there anymore, but that was right off the 33. So the idea would be to fade highs, fade lows. So fade new highs, fade new lows. If price gets below this low here, look to fade it back to 33 and perhaps across the range. Price gets to 37, 38, opportunity to fade it back down to 33 and perhaps across the range. And so that's the idea at the moment. If there's any failure to hold 28.5 and not pop back above, then you start working your way back down to S3 and start looking at these extensions. But right now, after the trending move, the idea is to look for a fade first below that 28.5. The primary idea today was that things may be slow here, but after the uptrending move, this right here could have been the impulse range that leads to more fading the edges. And so I mentioned earlier, the primary idea is to fade a new high or fade a new low. This was a very quick little rejection here, so I said we need a better test of that low below there. And you can see that price did indeed come down, traded well below that zone, and popped back above. This right here was a little bit of micro absorption here off that zone, and then we saw the move right back up to 33s. That was the first target. Remember, I mentioned if there's a trap below 28s, the idea is for a move to 33s, followed by a likely test of the recent high in the 37s. So the first high probability move has been done, but right here we've seen a double top come in off of 34, and that has a dark TOI band. That's the trail of intentions indicator. That shows us a visual dome, basically the depth of market, and it shows us how many contracts are resting at that area. So these are limit orders that are resting to sell, 2,655 contracts right now. It's noticeably darker at that price because there's much more volume looking to fill at that area than the prices around it. So it tells you that there's major participants here looking to sell and keeping it offered so far. And so it shows us a little bit of resistance. So right now we're seeing a little bit of a pullback, but the primary idea was that any push below 28.5 could be a trap opportunity for a return back to 33 and perhaps highs into 37s. And this overall uptrend continues to suggest more strength toward our 59.75 to 64.5 target zone. So those are swing target zones that could be hit next week or down the way here throughout June. But right now, this primary idea has worked out pretty decently. I think market structure now into about 30 needs to hold for this thing to continue into about 37. Over here in the ES, this one is played perfectly against our analysis to begin the day. The idea was that price was right here when I started talking about it. It had just hit the midpoint. I said, I think we just hit the midpoint of this impulse sell-off, so let's mark it. So price was up here at that time, and I mentioned that this might be the impulse move that creates the range. And so since we're trending up, the primary idea again would be to fade a price below 28.5 for a shot at 33, and then watching this thing continue higher to 37s. Once price gets above 37 and a 38, then that's where we may either see a rejection of those prices and a rotation back to value, which would be 33 to 31. Or this thing could just burst through that range, create an LVN, and then bulls are looking to defend and extend. So right now, we're finishing up the priority or the high priority trade, which was the fade below 28.5 into as high as 37s. Once this happens, now it's on to, hey, do we see extension, or are we going to see rejection back to VWAP? Because we are on the counter trend end now of the uptrending market, you have to be more careful up here fading back to this zone, because we could see further extension to the upside at some point. Especially with the NQ showing strength, this thing looks quite bullish, but we'll see what happens. But overall, again, we didn't do anything too fancy. We just listened to the market. The market said, hey, we have move down, right? An impulse move where it sold off, gave us the range for the day, and then that gave us the edges to watch for traps. Because of the overall trending market, the primary idea was to trap below 28.5, and that's what happened on 2 rotations. And this one's led to a move up. A very solid move. One thing I would say about that is that this is your likely trade of the summer. This is what it may look like. The summer won't be super active. It may be very slow and methodical. There may be certain times of the week where you are seeing great pace and tempo. Other times it'll be rather quiet. But this is the trade to study and practice this summer, because if you are in an upward trending market, and overnight you're going to see this type of impulse move that sets the tone for the day, and then whenever price gets below that low and a trap occurs or a rejection occurs, this is what can happen, and it'll be a slow, methodical move up. So you're going to see this over and over again. Again, this would be, if I had to put, your basic PivotBoss trades, this is one of them. This is the basic trader setup, which is a bear trap below the previous low, below a key range low. Bear trap below it, squeeze it back across the range to the midpoint and to the top. And that is something that you can do all the time, in any market, in any time frame, any instrument. And so a great little move here so far out of that one.